The NASDAQ traded down 39 points today, but you can see where it actually closed. It closed above where it opened. What does this reveal? It tells you there's still buyers in the market, that there was buying going on after the open. The Dow also produced an indecisive day with the trading closing up pretty close to the top end of the range, right at the T-line. This makes the trend analysis very simple for the candlestick investor. Notice the doji type day in the Dow. Same scenario in the S&P 500. The simple doji rule tells us that the trend is usually going to move in the direction of how they open after a doji, which tells us if we wake up in the morning and they're trading positive, more than likely it's telling us that the T-line is acting as support. If it opens lower, the opposite is true. The doji rule is the price is usually going to move in the direction of how they open it. A lower open would tell us they're in the process of backing this market off at this point. The fry pan bottom that we're witnessing in DXCM, one of our recommendations, is still in progress. Notice it was up $1.39 today when the markets were off severely. One of the best aspects of candlestick analysis patterns is that usually the pattern is going to continue in spite of what the overall market direction is doing. The reason for that is because the pattern is built up with an accumulation of investor sentiment that's usually not going to be altered by a major move in the market in general. Another one of our recommendations, Square, traded lower today, but then came back up and did a very strong bullish signal, a left-right combo with a booster. This also tells us that this little Morningstar signal is not letting the price close back below the T-line, and it's right here at a breakout level, which means positive trading from here could be taking this back up toward the top of the range, making a very strong uptrend, even though the overall market looks indecisive. The result of patterns are twofold. One, you have a high probability of knowing which direction they're going to go, and two, they're not going to be greatly influenced by the general market, that the investor sentiment is already building up. This allows investors to participate in good profitable trades, profitable in the sense that in an uptrending market, patterns are usually going to produce excessive profits, and they're usually going to move in the direction with a high degree of probability. And utilizing candlestick signals allows us to detect when it's time to take profits. For example, our short position on WATT, W-A-T-T, was covered over the last couple of days based upon, look at the dojis that were occurring in the oversold area. If you hadn't sold yesterday with it trading back up above the high of the previous day's doji, you would have been out today covering your short position with today's trading coming up above the previous day, yesterday's high of that doji. And where was this all occurring? Down here in the oversold condition. So candlestick charts simply reveal the same reoccurring trading aspects that occur in investor perspectives time after time. It allows you to see where the sell signal is to go short. It allows you to see where the buy signal is for time to cover your short positions. I always finish this off by saying this is not rocket science. This is just merely common sense investor perspectives put into a graphic depiction that the Japanese rice traders have identified for us over the last 400 years what usually occurs in human nature. That'll be it. We'll see you in the chat rooms.